Welcome to the age of the digital economy, where two prominent players, the stock market and cryptocurrency, are shaping the financial landscape. In the grand scheme of the global economy, we are witnessing an era of unprecedented change and growth. As technology shapes our lives, it's also reshaping our financial systems. Enter the digital economy, a realm where traditional and contemporary forms of currency coexist, and where the stock market and cryptocurrency have emerged as significant players. Let's take a step back and understand what these two are. The stock market, our time-honored financial institution, is a marketplace for buying, selling, and trading company shares. It's been around for centuries, helping companies raise capital and investors grow their wealth. It's a testament to the enduring power of traditional finance. On the other hand, cryptocurrency, the new kid on the block, is a digital or virtual form of currency using cryptography for security. It's decentralized, operating on technology called blockchain, which is a distributed ledger enforced by a network of computers or nodes. Bitcoin, Ethereum, and Ripple are just a few examples of the thousands of cryptocurrencies available today. Over the past decade, both the stock market and cryptocurrencies have experienced explosive growth. The stock market has continued its steady climb, with indices like the Dow Jones and S&P 500 reaching record highs. Meanwhile, the cryptocurrency market, though volatile, has seen a meteoric rise. Bitcoin, the first and most well-known cryptocurrency, was worth just a few cents in 2009. Today, it's worth tens of thousands of dollars. This growth and popularity of both the stock market and cryptocurrency isn't just about numbers. It's about a shift in the way we perceive value, trust, and decentralization. It's about the rise of a digital economy where traditional and digital assets coexist, compete, and sometimes converge. This evolution has led to intriguing comparisons between these two. So let's decode the stock market versus cryptocurrency. The stock market has been a cornerstone of the global economy for centuries. A bustling hub of exchange, the stock market is where companies and investors come together, a meeting point of dreams and capital. It's like a colossal financial supermarket, but instead of buying groceries, you're buying shares in companies. To understand the stock market, let's first familiarize ourselves with the concept of shares. Picture this. When you buy a share, you're acquiring a piece of a company, a slice of the corporate pie. The size of your slice depends on how many shares you own compared to the total number of shares issued by the company. The more shares you own, the larger your slice of the pie. This system of buying shares, this trait of ownership, is the very essence of the stock market. It's a public marketplace for the trading of company stock and derivatives at an agreed price. It's like an auction house where buyers and sellers negotiate prices and make trades. Now, what makes the stock market such a vital part of the global economy? It's all about capital. Companies use the stock market to raise capital for expansion, while investors buy shares with the hope that the company will grow, increasing the value of their shares. The stock market is characterized by its stability. It's regulated by financial authorities and has a set of established norms and rules that participants abide by. It's like a game of chess, where the rules and the players strategize within the boundaries. This, coupled with its long history, has made the stock market a trusted part of the global financial system. However, as familiar and as stable as the stock market is, it's not the only game in town. The digital age has brought with it a new contender, a new form of exchange that's turning heads and stirring conversations. While the stock market has a long history and established norms, the rise of cryptocurrency paints a different picture. Cryptocurrency, a relative newcomer, is disrupting traditional financial systems. Now let's dive into the world of digital money. Cryptocurrencies are a new breed of digital assets that use cryptography to secure transactions and control the creation of new units. They exist purely in the digital realm, outside the confines of banks and governments. At the heart of this technological marvel is the blockchain, a decentralized ledger that records every transaction across many computers. This ensures that the record cannot be altered retroactively without the alteration of all subsequent blocks. It's a system designed for transparency, security, and the elimination of middlemen. The impact of this new age contender on the global economy is profound. Consider the rise of Bitcoin, Ethereum, and thousands of other cryptocurrencies that have sprung up in the past decade. Their collective value has soared into the trillions, creating a parallel economy that's growing at an unprecedented pace. Yet, for all its promise, the world of cryptocurrency is not without its shadows. Chief among them is volatility. It's not uncommon for the value of a cryptocurrency to swing wildly in a single day, making it a risky proposition for the faint-hearted. Then there's the lack of regulation. While some see this as a boon, freeing them from the constraints of traditional financial systems, others view it with skepticism. The absence of a central authority means there's no safety net if things go wrong. But perhaps the most tantalizing aspect of cryptocurrency is the potential for high returns. Stories of overnight millionaires have fueled a gold rush mentality, drawing in investors from all walks of life. In essence, investing in cryptocurrency is a high-stakes game. It's a world where the rules are still being written, and the potential for both massive gains and significant losses loom large. But one thing is certain, it's a force that's reshaping the financial landscape like never before. The differences between these two are stark, but what about their similarities? Let's explore that in the next segment. Despite their differences, the stock market and cryptocurrency share some intriguing similarities. Let's begin with market sentiment. Both the stock and crypto markets are significantly influenced by the attitudes and behaviors of their participants. Investor sentiment, whether optimistic or pessimistic, can drive prices up or down in both markets. Another common ground is the potential for high returns. Stocks have a long history of offering substantial returns over the long haul, and cryptocurrencies, although volatile, have shown the capacity to yield significant gains in relatively short periods. The allure of high returns draws many to both these markets. But let's not forget the risks. Investing in either stocks or cryptocurrencies carries its own set of risks. Stocks can be impacted by various factors such as economic indicators, geopolitical events, and company performance. Cryptocurrencies, on the other hand, are notoriously volatile and can see huge price swings in a matter of hours. Now, on to the differences. Regulation is a big one. Stock markets are heavily regulated and monitored by government bodies, providing a level of protection for investors. Cryptocurrencies, however, operate in a largely unregulated environment, which can add to their risk. Stability is another differentiating factor. The stock market, with its long history, is generally seen as a stable investment platform, though it can have its ups and downs. Cryptocurrencies can be anything but stable, with prices that can skyrocket or plummet dramatically in a short time. Lastly, acceptance. Stocks are universally accepted and understood as a form of investment. Cryptocurrencies, while gaining acceptance, are still viewed with skepticism by some, and their use as a mainstream form of payment is still limited. Understanding these similarities and differences can help us navigate these financial landscapes. So whether you're a traditionalist or a futurist, there's a place for you in the digital economy. We've seen how the rise of the digital economy has presented us with two major players, the established stock market and the new age contender, cryptocurrency. Each has its unique features, benefits, and risks. The stock market, steeped in history and regulated by trusted institutions, offers a sense of stability and predictability. It's been around for centuries, weathering economic storms and continuously adapting to the changing times. On the other hand, cryptocurrency, with its decentralized nature and blockchain technology, promises a future of financial inclusivity, privacy, and independence from traditional banking systems. But as we've discussed, these two aren't as different as they may seem at first glance. Both are influenced by market psychology, driven by supply and demand dynamics, and subject to the ebbs and flows of investor sentiment. Whether you're considering investing in stocks or dipping your toes into the world of crypto, it's crucial to remember that we are not financial advisors. Doing your own research, understanding the risks involved, and making informed decisions based on your personal financial situation is paramount. There's an ocean of information out there about both the market and cryptocurrency. Don't be overwhelmed. Instead, embrace it. Learn, understand, and make the knowledge your own. The financial world is complex but inaccessible. For investing is not about making money. Financial literacy, understanding the world around you, and taking control of your financial future. It's about being a part of something bigger, whether that's the long history of the stock market or the exciting potential of cryptocurrency. Thanks for watching. Remember, knowledge is power, so keep learning, and you'll navigate the financial world with confidence. Be sure to like, comment, and subscribe, and hit the bell notifications so you'll get updates anytime we upload a new video.